Hey, how we doing? So this week's video is the 7th of February and we've already had the first week of February's trading done. Now this video, what I want to do, I don't want to take too long because I just tried to do a whole week's breakdown. I got to about 30 minutes and I thought this is too long. I went in on everything and I just think it was information overload, and I was going from everything. I thought it's too much, So what I've done, I'm going to scale back this video and just go over some higher time frame areas, how they react and what to look out for on your decision to then making your bias for the day or for the week. That was the only way I could think of, just sort of bringing the video down so it's not so much of a longer video and not too much information overload. I will cover all them things that went in them video, but it was too much. It was a bit of a shame deleting it, actually. I shouldn't have deleted it. Anyway, so last week we went over how it reacted from here, and I'm going to quickly repeat myself. So how I got my reaction, why I thought it was going to react from here, which it did, is I went onto the weekly. Don't really go to the weekly too much where we're intraday traders, day traders, but as you can see straight away, it looks like a decisional. There's an imbalance here, it feels it, decisional, higher time frame break and retest, so it just gives a good solid reason as to why it might react, to which it did. So we jump onto the daily. As you can see, it just feels right. You get to a point when you're trading for a while and you've been watching a lot of the charts, you see the charts and the areas sort of stand out to you and you know what looks right. Doesn't always mean it's going to be right, but it's a good chance there could at least be a reaction. So it sort of just makes sense why it's here. Like liquidity's been taken here on that black line, if you can see. That was the weekly, this box here, that weekly decisional area, higher time frame break and retest. So yeah, it just makes sense. Okay, it could react from here. So then we'll jump down on to the hourly. So what I want to do, I do like going on the hourly quite a bit, is my higher time frame. Let's just bring that down to there. I do like going on the hourly on my higher time frame because we're intraday traders. You can always go higher, but I think you got to start learning. You don't want too much on your charts. If you see someone and they've got stuff everywhere, you can find a good trade, but then you can talk yourself out of it because you've got other confluences saying, well, actually it does this or actually it does that. You can't have too much. You've got to have your set of rules. You've got to have your edge. You've got to believe in it, and you've got to go from there. So what I want to go over is we had our reaction from here. So what I've done straight away is, I think I might have said this as well, but I've said it on other videos. Straight away, I created this zone and I put an alert there. Oh crap. I put an alert here, like that, for a break and retest. And then I'll just put, it'll be gold, higher time frame, break and retest. So when I know it gets there, I know it could react. Well, the purpose of this video is I want you to understand when it gets to an area, we wait for more confirmation before we start thinking and taking trades from that area. Before we just believe in it instantly, we want to wait for more confirmation. So even from here on Monday for me, it was the first day of the week, first day of the month, and it had this massive pullback. I basically didn't do nothing on Monday because you don't know what's going to happen. This is the thing. No one knows exactly what's going to happen, but all we can do is get to areas where we believe it can react. So Monday played out and it left this massive imbalance here. Okay, so I'm thinking it's going to react and go higher anyway. I've got this break and retest where it could go up to. We've got liquidity along the way where it can start taking. As you can see, we've got liquidity all along here that it can start taking. So it's got a purpose to go up. This is the thing with trading. Before you get into a trade, there has to be a reason why it's going to go in that direction. It needs liquidity. It needs where people have jumped on. It needs to stop them out for the institutions to get that money, to get them to make it worth them taking that trade. So it had a purpose to go up, but before we just jump on it, we want to wait for confirmation. So we wait for a nice area to be broken. I know this is on Monday and I didn't do anything on Monday, but still it gave me confirmation. Like, bear in mind, what's that, the 15 minute? What does it look like on the hourly? Yeah, you can even see on the hourly, like it's broke that there. So that's a good confirmation. If you can see it on the hourly, that, okay, if it's broke that area, that's more confirmation. Right, this is gonna start coming back bullish again. So that's when we think, okay, we have a little pullback here. That's when we can start looking into trades going longer. Again, I didn't trade Monday, but you get what I'm trying to say. And again, it come up to this area on, what was it, Wednesday, and reacted from here. So we knew it could react from this area. So what do? We don't just jump straight in and take a short, obviously not. We wait for these areas here to break. We're on the 15 minutes, so we wait for areas to break. Like, that's a nice little break. That's a nice little break. So now we're getting that confirmation, because we want, like I said, we want confirmation, but then we want to know where it's heading. So for me, after Monday played out, if you look on the 4 hour, again, this is another thing that we called massive imbalance here, and it has a brilliant 4 hour order block. So this is a good, and an order block is where institutions and that like bringing it back down to fill the imbalance. So it's all about all these little confirmations adding up, because you can even say, I guarantee, in fact, it looks like it does. If you go on the Fibonacci, you can go here. Yeah, it's not far off. Gold loves being between just past equilibrium at 50% and near the 615. So if you was to take that away and then come here, yeah, I thought it was. I'm sure I did do that one during the week. Look, it comes back down there to the 618 again. So it's these confirmations that make you think, right, it could react from the zone. There's a reason for it to react. So you know, when you have a break and retest here, if you use the Fibonacci, or if you can see the imbalance, if you can see the 4 hour order block, there's a reason for it to come back to that area. And that's the reason it's come back to that area and then reacted. I think I called that on a live as well. So always feels a little bit better. But we don't know. We do not know. It could quite easily go all the way through. Quite easily go all the way through. But I mean, again, the purpose of this video is when it gets to these areas, I don't want people just taking a trade because it's reacted, because it might not. We wait for confirmation. Like here, like it's reacted from here, but it hasn't broke anything yet. It hasn't broke anything yet. So for me, like it has now, it's broke that high there. So that's good. It's broke that high. I mean, on Monday, I would have thought it would definitely have a pullback. But if it has a pullback and it doesn't break that low, because we don't know, could easily go all the way down. If it doesn't break that low, takes liquidity, it could definitely head back up the way. Let's go back. Let's go on a 4 hour and see what Friday looks like. So as you can see, you've got that massive wick there. So that's not really telling me too much on the hourly. Yeah, I mean, it doesn't look too nice, to be fair. So we'll see how it plays out. I mean, if it stays down here and breaks it again, then we could be going back bullish. But the main purpose of this video is, so when you get in a trade, you want to be aiming towards something so you can get your bias. So for me, I had the break and retest. It broke that high, then carried on its way. So for Tuesday, you got a better chance thinking, okay, it could be going back bullish. And then when it reacts over here, it breaks some lows. It could be going back bearish. But where is it going? Is there a reason that it's going that way? And it did. Monday did give it a reason for it to go that way. Otherwise, it might have just been a little pullback and continue on its way. So it has got reasons, because the market, that, like David said in the community about the institutions, this is one of them reasons. The institutions, there's a couple of reasons. They have areas to fulfill. Like here on the 4 hour, They want to get that filled. The market always needs to be balanced. If someone's selling, someone's buying. If someone's buying, someone's selling. It needs to be equal. So 9 times out of 10, if we've got areas here where there's still imbalance on a 4-hour, quite a high time frame, 9 times out of 10, at one point, excuse me, it's going to come back. It doesn't mean it's going to come back straight away, but it's going to come back. And that's where it goes on. We can create zones from these areas, like David was saying about zones and the other traders. Like, let's go back here, because I'm pretty sure if we go on the, was it the daily? Might have even been the hourly. Yeah, like here, you start seeing these resistant zones. So even here, let's get rid of that box there, that is ugly. But when you drag these across, like you start seeing these zones where it can react from. That there is a liquidity sweep. That's why it's broke that zone. I mean, even if you pull that across, wherever that taps into it, it's a bit pulled by the hair. But even here, we've got zones here. But when you start, I can just pull that across. Look. See that there? That there, it's reacted off here. So that was another reason there for it to react lower. That's always quite a good confirmation, to be fair. I don't want to dig too deep like I did on the other video, but when how can I say this easily? When a chart is taking a lot of liquidity and it's had a purpose, little cheat code there, on them reaction zones, good times, like it goes back quite well on them. So you've got the high time frame there, you've got the Fibonacci 618 that it comes to, you've got this confirmation here where it breaks the previous liquidity, it likes to react off of that zone. So there are reasons why it's reacting, but then we don't take counter trend trades excuse me, until we see more evidence, more proof. Like if you jump on the hour, we can see it's broke again. So when I'm getting up on Thursday, there is good confirmation. I had here for it to go to, let's jump on the 5 minute. When I got up on Thursday, and I think I did get a nice sell on Thursday on gold, I knew that it broke that low there. It hadn't gone up higher. I knew there was a target down here for it to come to. So I had a lot of reasons for this to go bullish. And because it's reacted off here, it's broke. That's enough evidence for me. Now I'm just looking for a pullback. I'm looking for some evidence for my setup trade is basically what I'm looking for. So I know once it comes into these POIs and it starts making these reactions on the smaller time frames, because it's fractal, it makes these same patterns on every time frame. I'm looking for a short here, up here, speed and momentum, back down. So I hope that helps. It's actually quite hard trying to keep these too short, but I don't want to do them too long and just give too much away. So I'm learning as I'm going, guys, to try get valid information out. I hope people have taken some valid tips from that. Quick overview, quick breakdown. When you're going to take a trade, your bias, why is your bias this direction? Is there a reason it's going to go higher? Is there a reason it's going to react from that area? When it gets to that area, wait for it to react and wait for it to prove itself. Not just start slowing down, that's one thing. Wait for it to make a break on the hourly chart. Then you've got a bit more confirmation, like, okay, cool, well, it couldn't push it up higher no more, so now we're coming down. If it's going down, where's it going? Where is it going to? Is there an imbalance? Is there liquidity below? Where is it going and why is it going down? If you've got a purpose for that reaction and you've got a purpose for it to get down here, now you're thinking, okay, there's a good reason why I can take a short trade here. And what I will say, if you tick all your boxes and you think this is a good edge and you know yourself it's a good trade and that trade loses, don't beat yourself up over it because you've ticked. That's a good loss. I know there's no such thing as a good loss, but that is a good loss. So don't beat yourself up, because we all have losses as long as you're applying your rules, because we know our way of trading is very, very profitable. It's very consistent, very profitable, but it takes losses like everything does. But anyway, I won't ramble on too much longer. I hope that helps. Yeah, and that's it. I shall see you next week for another market recap. See you then. Have a good week.